Most traders think successful trading looks exciting. They imagine constant action, rapid decisions, multiple screens lighting up with opportunities, and adrenaline-fueled profits rolling in minute by minute. They picture the Hollywood version of trading intense, dramatic, and thrilling. They see Wolf of Wall Street. They see flashy Instagram posts of traders celebrating massive wins. They see the highlight reels and assume that's what profitable trading looks like every day. But if you've ever watched an actually profitable trader work, you know the truth looks nothing like that. Profitable trading looks boring. It looks painfully slow. It looks like nothing is happening most of the time. And if that confuses you, if you've been chasing excitement in your trading and wondering why your account keeps shrinking, this video will shift your entire perspective on what successful trading actually looks like and why the emotional experience of trading is inversely correlated with profitability. When something I say hits differently, show some appreciation by liking the video and subscribing to the channel. Not for vanity metrics, but because these realizations are what separate profitable traders from everyone else. These insights don't come from strategy books or indicator tutorials, they come from honest observation of what actually works over years and decades in the markets. The most successful traders I know spend most of their time doing absolutely nothing. They're not frantically scanning multiple time frames. They're not jumping between different assets. They're not glued to financial news. They're not in Discord channels debating every tick. They're waiting. And waiting looks boring from the outside. But that boredom is where the money is made. That patience, that ability to sit still when everyone else is frantically active. That comfort with inaction. That's the edge that most traders never develop because it goes against every instinct they have about what hard work should look like. Here's what most traders don't understand. Excitement in trading is expensive. Every time your heart rate increases while trading, you're probably losing money. Every time you feel that rush of adrenaline, you're probably making an emotional decision. Every time trading feels like a video game or a casino, your account is probably heading in the wrong direction. This correlation is so strong that if you tracked your emotional arousal level against your trading results, you'd see it clearly. High emotion equals poor results. Low emotion equals good results. Think about the last time you felt really excited about a trade. Maybe price was moving fast. Maybe you saw a setup that looked perfect. Maybe you were recovering from a loss and felt that surge of hope. What happened? If you're honest, that excitement probably clouded your judgment. You might have entered without proper confirmation. You might have used position size that was too large. You might have ignored risk-reward because you were caught up in the moment. Excitement overrides rational thinking. It's a feature of human psychology, not a bug. But in trading, it's deadly. Excitement means you're emotionally invested in the outcome. And emotional investment clouds judgment. When you're excited, you're not thinking clearly. You're reacting. You're hoping. You're attached to being right. None of these mental states lead to good trading decisions. Excitement activates your sympathetic nervous system, your fight or flight response. Blood flow shifts away from your prefrontal cortex, where rational thinking happens, and toward your limbic system, where emotional reactions happen. You literally cannot think as clearly when you're excited. Your brain is in survival mode, not analysis mode. Profitable traders have learned to disconnect their emotional state from market action. They don't get excited when a trade is working. They don't get devastated when a trade fails. They remain emotionally flat because they understand that any single trade is just one data point in thousands of trades they'll take over their career. One trade means nothing. 1 week means nothing. Even 1 month means relatively little in the context of a multi-year trading career. This perspective creates emotional detachment, which looks like boredom to people who don't understand what they're seeing. This emotional flatness looks like boredom to outsiders. But it's not boredom, it's professional detachment. It's the same detachment a surgeon has during a routine procedure. The outcome matters, but the emotional reaction to the outcome doesn't interfere with the process. The surgeon doesn't get excited when the surgery goes well. They don't get devastated when complications arise. They stay calm, make the next best decision, and maintain their professional composure. Trading requires the exact same psychological state. If you've noticed that your best trades happen when you feel calm and your worst trades happen when you feel excited, Drop a comment acknowledging that pattern. Sometimes just recognizing it is the first step to changing it. Awareness precedes change. You can't fix a pattern you can't see, and most traders are completely blind to how their emotional state predicts their trading outcomes because they're too caught up in the emotions themselves to step back and observe the pattern. The need for excitement in trading usually comes from deeper psychological places. Some traders are addicted to the dopamine hit that comes from market volatility. They're not actually trying to make money, they're trying to feel something. The market becomes a replacement for other areas of life where they might be unfulfilled. Maybe their job is boring. Maybe their relationships lack spark. Maybe they feel stuck in life. Trading becomes the one place where they feel alive, engaged, stimulated. But when you need the market to provide emotional fulfillment, you've already lost. You're using trading to meet psychological needs it was never designed to meet. This is why some traders unconsciously sabotage their own success. As soon as trading becomes routine and boring, they take unnecessary risks to recreate that excitement. They overtrade. They increase position size beyond their risk parameters. They abandon their rules, all because boredom feels uncomfortable. They've become addicted to the emotional volatility of trading, and like any addiction, they need increasingly risky behavior to get the same emotional payoff. This is a downward spiral that ends in blown accounts and burnout. But here's the paradox. The discomfort of boredom is what protects your capital. When you're bored, you're not doing stupid things. When you're bored, you're following your plan. When you're bored, you're being selective. And selectivity is the foundation of profitability. The traders who can tolerate long periods of boredom punctuated by brief moments of calculated action are the ones who survive and thrive long term. The traders who need constant stimulation are the ones who flame out, often spectacularly, and wonder what went wrong. Elite traders have made peace with boredom. They've accepted that most days will be uneventful. They've accepted that most hours will involve no trading at all. They've accepted that profitable trading is closer to watching paint dry than playing a video game. And that acceptance is what allows them to wait for genuine opportunities instead of forcing mediocre ones. They're not sitting there suffering through boredom, they've reframed boredom as productive waiting. They're doing the work of trading even when they're not trading. The waiting is the work. Think about professional poker players. The best players fold most hands. They sit there for hours doing nothing, folding hand after hand after hand, and when they finally play a hand, it's because the probabilities are heavily in their favor. They're not playing because they're bored. They're not playing to see action. They're playing because the math says this is a high probability opportunity worth risking capital on. Trading works exactly the same way. You fold most setups, you wait, and when you finally act, it's because everything has aligned in your favor, not because you're bored or because you feel like you should be doing something. If trading feels exciting to you right now, that's a warning sign. It means you're probably overtrading. It means you're probably taking too much risk. It means you're probably treating the market like entertainment instead of business. And entertainment is expensive when your capital is on the line. Think about it. People pay money to be entertained. Movies, concerts, theme parks, you pay for the emotional experience. If trading is entertaining you, you're probably paying for that entertainment with your trading capital. That's an expensive form of amusement. The shift from excitement seeking to boredom acceptance is one of the most important psychological transitions in trading. It's the moment you stop being a gambler and become a trader. It's the moment you stop chasing action and start waiting for opportunity. It's the moment your results start improving dramatically because you're no longer fighting against your own need for stimulation. This transition is uncomfortable because it means confronting the deeper question: why do I need trading to be exciting? What void am I trying to fill? These are uncomfortable questions, but answering them honestly is essential for long-term success. Some traders resist this transition because they're afraid that if trading becomes boring, they'll lose interest. They worry that without excitement, they won't be motivated to trade. But that fear reveals a fundamental misunderstanding of what drives sustainable success. Professional motivation doesn't come from excitement. It comes from purpose, discipline, and respect for the craft. A professional trader is motivated by consistent execution, not by adrenaline. They're motivated by following their process perfectly, not by hitting home runs. They're motivated by protecting capital, not by gambling it for emotional stimulation. When you're bored in trading, you're actually in the optimal mental state. Your prefrontal cortex is engaged. Your emotional brain is quiet. You're thinking clearly. You're seeing the market objectively. You're making decisions based on probabilities, not feelings. This is when your best work happens. This is when you execute your edge flawlessly. This is when you make the decisions that compound into long-term profitability. All of this happens in a state of calm boredom, not excited anticipation. The traders who struggle the most are often the ones who can't sit still. They need constant stimulation. They need to feel busy. They need to feel like they're actively doing something. But in trading, doing nothing is often the highest value activity. Waiting is work. Observing is work. Not trading is work. This is counterintuitive because in most areas of life, visible action creates results. But in trading, invisible discipline creates results. The decision not to trade is often more valuable than the decision to trade, but it's invisible so it feels like you're not doing anything. If you've ever felt guilty about not trading, like you were wasting time or missing opportunities by sitting on your hands, that guilt is misplaced. Those moments of inaction might be the most profitable decisions you make all week. Every bad trade you don't take is money saved. Every impulsive decision you avoid is capital preserved. The opportunity cost of bad trades is massive. But most traders only count the opportunity cost of missed good trades. They forget that avoiding bad trades is just as valuable, actually more valuable, than catching good trades. Let me give you a practical example of how this plays out. Imagine two traders. Trader A trades every day. They feel like they should be in the market constantly. They take 20 trades per week. Their win rate is 55%. They feel busy, productive, engaged. Trader B trades selectively. They only trade when their specific setup appears. They take 4 trades per week. Their win rate is 60%. Same strategy, same market. Different approach to frequency. Over a month, Trader A takes 80 trades. With 55% win rate, they win 44 and lose 36. If their average win is $200 and average loss is $150, poor risk-reward because they're entering suboptimal setups. They make $8,800 on winners and lose $5,400 on losers. Net, $3,400, not bad. But look at the emotional toll. 80 trades means 80 decisions, 36 losses to psychologically process, constant screen time, high stress. Trader B takes 16 trades in that same month. With 60% win rate, they win 10 and lose 6. But because they're selective, they get better risk-reward. Average win is $400, average loss is $100. They make $4,000 on winners and lose $600 on losers. Net, $3,400. Same profit as Trader A, but with 80% less trading, 83% fewer losses, and a fraction of the emotional energy expended. Trader B spent most of the month doing nothing, looking lazy, looking bored, but they made the same money with far less effort and stress. This is what boring trading looks like in practice. Less action, same or better results, sustainable over decades instead of burning out in months. But most traders can't accept this because they're addicted to the action. They'd rather trade 80 times and feel busy than trade 16 times and feel bored, even though the outcomes are identical. This reveals that their need for activity is greater than their desire for profit. They're using trading to meet psychological needs, not financial goals. Boring trading is sustainable trading. You can maintain a boring routine for years. You can't maintain an exciting, adrenaline-fueled approach for years. That approach leads to burnout, blown accounts, and eventually quitting. The traders who last decades in this game are the ones who figured out how to be comfortable with boredom. They figured out how to find fulfillment in the process of patient execution, rather than in the emotional highs and lows of constant action. There's also a deeper truth here about identity. If you need trading to be exciting, you're using trading to fill a void in your life. You're using it for stimulation that should be coming from somewhere else. And when you need something from the market beyond profits, when you need entertainment, validation, or excitement, you're trading from a place of weakness, not strength. The market doesn't care about your emotional needs. It doesn't exist to entertain you. It doesn't exist to make you feel alive. It exists, and your job is to extract profit from it when conditions are favorable. That's it. The moment you need anything else from the market, you've already lost. Your decisions will be distorted by this unmet need. You'll overtrade because you need stimulation. You'll take unnecessary risks because you need excitement. You'll hold losers too long because you need the drama of hoping for a recovery. All of these behaviors stem from using trading to meet emotional needs it was never designed to meet. Elite traders often have rich, fulfilling lives outside of trading. They have hobbies, relationships, and other sources of excitement and meaning. Trading is just their job, a job they take seriously, but a job nonetheless. They don't need trading to be thrilling because they get their emotional fulfillment elsewhere. They can come to the market with no agenda other than executing their process and extracting profit when opportunities present themselves. This separation is crucial. When trading is just one part of a balanced life, you can approach it with the calm detachment it requires. When trading is your entire identity and your only source of stimulation, you'll unconsciously create drama in your trading to meet your emotional needs. You'll find ways to make it exciting, even if that excitement destroys profitability. This is why traders who have nothing else going on in their lives often struggle the most. They need too much from trading, and trading can't give them what they need. If you're still watching at this point and this perspective is landing, hit that like button. It tells me this content is resonating and helps other traders find these insights. The algorithm rewards engagement, and engagement helps this message reach people who need to hear it. Another aspect of boring trading is consistency. When trading is exciting, it's unpredictable. One day you're up huge. The next day you're down huge. Your emotions are all over the place. Your confidence swings wildly. Your decision-making quality varies dramatically. This inconsistency makes improvement impossible because you're never executing from the same mental state twice. Every trade is colored by whatever emotion you're experiencing that day. You're not gathering clean data on whether your strategy works, you're gathering data contaminated by emotional variability. Boring trading is consistent trading. You show up the same way every day. You follow the same process every day. You make the same types of decisions every day. This consistency creates clean data, and clean data allows you to actually measure what's working and what isn't. Without consistency, you're just guessing. You can't distinguish between a strategy problem and an execution problem. You can't identify which setups actually have edge and which don't. You're flying blind because your emotional variability obscures the signal in the noise. The most powerful shift happens when you start measuring success differently. Instead of measuring success by how much money you made today or how exciting your trades were, you measure success by how well you followed your process. Did you wait for your setup? Did you manage risk properly? Did you exit according to your plan? These process-based metrics are what actually predict long-term profitability. Outcome-based metrics, P&L, are noisy and unreliable in the short term because variance dominates small samples. And here's the beautiful part. Following your process perfectly can feel boring because it's repetitive, but that repetition is what creates mastery. You're training your brain to execute flawlessly under any market condition. You're building neural pathways that make good trading automatic. You're becoming a professional. The best professionals in any field make their expertise look effortless because they've practiced the fundamentals so many times that they've become automatic. That's what boring, repetitive training creates: automatic excellence. Excitement fades, discipline doesn't. Adrenaline is temporary, process is permanent. The traders who chase excitement will always be at the mercy of their emotions. The traders who embrace boredom will always be in control of their decisions. This isn't about becoming a robot or eliminating all emotion, it's about not needing the market to provide emotional stimulation. It's about being okay with trading, being mundane, routine, even tedious at times. Because that mundane consistency is what profitable trading actually looks like. If you've been treating trading like entertainment and it's been costing you money, this is your wake-up call. Trading is not entertainment. Trading is business. And successful businesses are built on boring fundamentals executed consistently over time, not on exciting moments of brilliance. Think about any successful business you know: a restaurant, a retail store, a service company. The day-to-day operations are boring. Ordering inventory, managing staff, maintaining quality control, tracking finances. None of it is exciting. but that boring consistency is what creates long-term success. Take an honest look at your trading over the past month. How many of your losses came from trades you took because you were bored and needed action? How many of your best trades came from patiently waiting for perfect setups? The correlation is probably pretty clear. Excitement correlates with losses. Boredom correlates with profits. This is not a coincidence. This is the fundamental psychology of trading revealing itself in your results. The path forward is simple but not easy. Learn to be comfortable with doing nothing. Learn to sit on your hands. Learn to watch the market without participating. Learn to let opportunities pass if they don't meet your exact criteria. Learn to value capital preservation as much as capital growth. Learn to find fulfillment outside of trading so you don't need the market to entertain you. Learn that showing up to an empty market and doing nothing is just as valuable as showing up to an active market and making profitable trades. This mindset shift won't happen overnight. You've probably been conditioned to seek excitement for your entire life. Society rewards action, hustle, constant movement. But trading rewards the opposite. Trading rewards patience, stillness, selective action. This is counterintuitive and uncomfortable. But every time you choose patience over action, you're rewiring your brain. Every time you let a mediocre setup pass, you're strengthening your discipline. Every time you close your platform without trading, you're investing in your long-term success. One practical technique that helps is to track boredom days, days where you felt bored, didn't trade, and nothing happened. Track these in your journal just like you track trading days. Write, Tuesday, December 23rd, no trades. Market conditions not aligned with my strategy. Felt bored but stayed disciplined. This is what professional trading looks like. When you review your journal later, you'll see that these boring days were productive days. You protected capital, you avoided bad trades, you stayed in the game for the next good opportunity. Another technique is to deliberately find other sources of stimulation. If you find yourself wanting to trade just because you're bored, that's a signal that you need to step away and do something else. Go for a walk, read a book, exercise, call a friend, work on another project. Get your stimulation from somewhere other than the market. This serves two purposes. It prevents boredom-driven trading, and it reminds you that trading is just one part of your life, not the entirety of it. At this point, ask yourself, am I comfortable with boring trading, or am I still chasing excitement? That honest answer will tell you everything about where you are in your development as a trader. If you're still seeking excitement, you have work to do. If you've made peace with boredom, you're on the path to consistency. This isn't a judgment, it's just an observation. Most traders spend years chasing excitement before they realize it's destroying them. The sooner you recognize this pattern, the sooner you can break it. The traders who make it in this game long-term are the ones who figured out that boring is beautiful. Boring means consistency. Boring means predictability. Boring means control. Boring means profitability. If you can embrace boredom in your trading, you're already ahead of 90% of traders who are still addicted to the emotional roller coaster. You've developed the psychological edge that actually matters. Let me share one more example that drives this home. I know a trader who makes 7 figures a year. If you watched him trade, you'd be disappointed. He sits at his desk for maybe 2 hours a day. He looks at his charts. He waits. Most days, he doesn't trade at all. When he does trade, it takes about 5 minutes entry, set stop, set target. Done. Then he walks away. He spends the rest of his day with his family, working on other businesses, exercising, reading. Trading is boring for him. It's routine. It's mechanical. There's no drama. Compare this to a struggling trader who's at his screen 8 hours a day. Multiple monitors. Constant analysis. Always in trades, always thinking about trading, always stressed about trading. His wife is frustrated because he's never present. His health is suffering because he never exercises. His account is slowly bleeding because he's over-trading. But he feels like he's working hard. He feels dedicated. He feels like he's doing everything right. The contrast is stark. The successful trader looks lazy, the struggling trader looks dedicated. But the results tell the real story. This isn't to say you should only trade 2 hours a day. Different strategies require different time commitments. The point is that time at the screen doesn't equal profitability. Emotional investment doesn't equal profitability. Excitement doesn't equal profitability. Calm, selective, boring execution equals profitability. If you can internalize this truth, you can save yourself years of struggle. This is Trader's Metal Edge, where we focus on the psychological truths that actually create sustainable trading success. If this video challenged your perspective on what successful trading looks like, subscribe for more content that cuts through the glamorized nonsense and tells you the real truth about this game. Profitable trading looks boring. The sooner you accept that and even embrace it, the sooner your results will reflect it. Once you make peace with boredom, everything changes. Your stress decreases, your decision quality improves, your capital grows steadily instead of swinging wildly. And ironically, trading becomes more enjoyable when you stop needing it to be exciting. The peace of boring, consistent execution is far more satisfying than the chaos of adrenaline-fueled gambling. That's the final paradox. Boring trading is actually more fulfilling than exciting trading. It just takes wisdom to recognize it.